Do you believe the market moves because a company reported good earnings? Or that price rises because more people are buying than selling? These are comforting stories. But the truth is colder. The market is now a digital ghost, a web of code and algorithms that thinks faster than you and feels nothing. It doesn't care about your analysis or your emotions, it only sees data points. You, the retail trader, are just another pattern to exploit. The enemy is no longer a shouting broker on the floor, it's invisible, living in fiber optic cables and data centers. This new predator doesn't get greedy or scared, it executes with brutal efficiency. Its purpose: extract liquidity from the market, often from those who still think they're playing a human game. What you see as price movement is often a digital mirage. The charts and patterns you study are breadcrumbs, placed by algorithms to lead you where the machine wants. These systems don't just react to the market, they create it. Every tick is a calculated move in a game you were never meant to win. The rules changed while you were learning the old ones. To survive, you must shatter old beliefs. You're not trading against people, you're trading against a dispassionate intelligence that knows your strategy before you do. It anticipates your reactions, your fear, your greed. It's waiting for you. The question isn't how to beat the market, the question is how to avoid being devoured by the machine. The first step: unlearn what you thought you knew. Accept the new reality. Only then can you hope to survive. There was a time when the market was deeply human, chaotic, loud, and driven by raw emotion. The floor of the New York Stock Exchange was a mosh pit of traders, fortunes made and lost on rumors and gut feelings. Supply and demand were tangible forces, felt in the crush of bodies and the roar of the crowd. Price discovery was a negotiation, an argument played out in real time. Human intuition was the edge. Legendary traders read the tape and sensed the crowd's mood. The market had a personality, a mood you could read if you were fluent in its language. But that world is gone. The trading pits are now silent, replaced by the hum of servers. The human element has been pushed to the fringes. We traded messy, emotional interaction for the cold, calculated world of algorithms. The speed changed, but so did the very nature of the game. The market is no longer a reflection of us, it's a machine. The shift to machines began slowly, then accelerated. Simple algorithms evolved into complex systems as Wall Street raced for speed. Today, up to 90% of trading volume is handled by algorithms. For every 10 shares traded, 9 are machine to machine. The human trader is a rowboat in the wake of automated supertankers. These systems are omnipresent, processing information at inhuman speeds. They don't invest for the long term, they exploit microsecond price discrepancies. Strategies like spoofing and arbitrage manipulate the market in real time. High-frequency traders pay for co-location and direct data feeds, ensuring they're always first. Retail traders using standard internet are always behind. In this world, if you're not first, you're last. The playing field isn't level. The machines have the edge. The biggest myth is that price moves reflect real supply and demand. Much of what you see is a digital illusion, crafted by AI to trigger human emotion. If an AI wants to buy, it might first create the illusion of selling, flashing large sell orders, nudging the price down. Retail traders panic and sell. The AI quietly buys at lower prices. The chart shows a dip, but it's a manufactured event. These systems are masters of psychological warfare, knowing exactly which patterns trigger fear or greed. They create fake breakouts to lure in buyers, then reverse and trap them. Classic technical analysis is less reliable. AI knows your patterns better than you do. It knows where you'll place stops and take profits. The AI doesn't follow patterns, it weaponizes them. It paints textbook setups, then pulls the rug, triggering cascades of forced selling. The tape is no longer a record of truth, it's a canvas for manipulation. The market is a psychological battlefield. Modern market AI isn't trying to predict the future, it's engineering failure for the masses. The system identifies where most retail traders are positioned, then moves price to inflict maximum pain. It's a hunt. The AI is the predator, your stop-loss orders are the prey. Retail strategies are easy to spot in the data. A classic trap. A stock consolidates, retail traders set buy stops above and stop losses below. The AI triggers the breakout, luring in buyers, then reverses and sells aggressively. The price crashes, triggering stop losses in a domino effect. The AI buys back at the bottom, harvesting liquidity from both sides. This isn't random, it's systematic, unemotional, and ruthlessly effective. The machine profits from your predictability. Every move is calculated to maximize your losses. The market is a game of engineered traps. Survival means not being the easy prey. Why does the market seem to work against you? Because it is. The market is a zero-sum game in the short term. Every winner needs a loser. Institutions and their AI systems ensure they're not the losers. Their strategy, max pain, move price to inflict the most damage on the largest number of retail traders. The AI sees the entire battlefield order books, options data, social sentiment. If most retail traders are long, the path of max pain is down. If they're short, it's up. This explains why good news can lead to a drop, or hated stocks can rally. You're not unlucky, you're targeted. Your predictable behavior is your weakness. When you buy a dip, you're often buying from an algorithm that created it. The system preys on FOMO and fear of loss, emotions the AI doesn't feel, but expertly manipulates. The market is designed to bleed the herd. The digital jungle is ruthless, but not hopeless. If you cling to old strategies, you'll be devoured. The first step is to wake up. See the market for what it is, a battlefield of code. This isn't a eulogy for retail traders, it's a call to adapt. Machines have a weakness, they're programmed, and their patterns can be learned. Don't fight the machines head-on. Instead, learn how they operate and align your strategy with theirs. Study market microstructure, order flow, and algorithmic traps. Look for signs of manufactured moves, not organic ones. Your goal isn't to predict where price should go, but where algorithms need it to go. Empathy for the herd is a liability. Understanding the predator is your asset. This path is hard, it requires unlearning instincts and retraining your brain, but it's possible. By accepting AI's dominance, you take the first step to survival. You can adapt, learn new rules, and develop strategies for this new world. The digital jungle is dangerous, but not impenetrable. For those willing to evolve, there's still a fighting chance. Don't be the prey, be the survivor. The future belongs to those who adapt.